Hey guys, Eddie here from Dilleen Property. Today we're doing a quick video. Very quick, very simple, very easy. What is negative gearing? And today I'm going to explain a little bit about negative gearing in this video. What negative gearing is when you purchase an investment property and say the property rents out for $300 per week and say it costs $400 a week to hold that property in terms of expenses, council rates, water rates, management fees, insurance. That costs $400 and you've only got $300 coming in. Technically, that property is negative geared by $100 a week. Negative gearing basically means you're losing money. You're negative gearing a property to claim some back for tax purposes, because you get, we're in Australia, it's a wonderful thing that you get tax deductions from your taxable income when you own a negative geared investment property. In saying that, I do not recommend purchasing a bunch of negative geared property or buying massively negative geared property. What's worked best for me with building my own property portfolio to 14 plus properties that I'm at the moment, and I want to get to 30, 40, 50 properties in the near future, investment properties, is building a sustainable portfolio that will look after itself in terms of cash flow and also have growth. Those are the things I want, and I also want to be able to buy a property below market value. I'm gonna, we'll do a quick scenario here on the board. Say you buy a property for $400,000, and there's a reason why I'm using a red marker, because red, aka, it's bad. So you buy a property for $400,000, and it rents out for $350 per week. So that's how much you buy it for, rent. $350 per week. Say you did a 10% deposit with this property. You could do it 20%, but say you did a 10%. So you put $40,000 and you bought this property for $400,000. You now have a loan against that property of, you guessed it, $360,000. Loan, right? It's renting out for $350 a week. Most people think that's pretty good. Right there, that's about a 4.8% yield, about a 4% to 5% rental yield. 4 to 5%. It's okay, it's not great. I think it's pretty bad, but the scenario, jumping back to it, won't take up too much time. Your loan's at $360,000. Say the interest rate's at 5%, could be more, could be less. Right now we're shooting this video, it's 2018. Say it's at your interest rate's at 5%, they could go up, could go down. Say the loan repayment's 5%. 5% on $360,000, principal and interest or interest only. We'll talk about that in another video. Say you do principal and interest in this scenario, would probably make your loan repayments around $450 per week. Could be less, could be more. Let's just say $450 per week repayments. So it's costing $450 per week in mortgage repayments, and you're getting $350 a week rent. Technically, it's negative gearing the property. Not only the repayments. This is where if you're an accountant or you go to get your tax done every year, you have to have a good property tax accountant as well. Other things to consider, which will make this, probably holding this property more like $550 per week in repayments, is, put it on this side, council rates, insurance. Excuse the messy writing, try not to take too much time. Council rates, insurance, water rates, management fees, If it's a townhouse unit or villa or whatever, then you're going to pay strata or body corporate. Right there, that could be $1,500, that could be $1,500 or $1,000, that could be $800, $1,000, that could be $1,500, 1,000, whatever it is, that could be $2,000. It's right there, it could be $6,000, say $5,000 per week. That's $5,000 for the entire year, right? So per week, you're looking at another $100 roughly, just to hold the property. In all that equals, say, 100 per week in expenses. EXP, expense. So 100 expenses. Writing's getting worse and worse. So you got, per week, you're spending $450 on repayments, $100 on expenses. That's $550 per week just to hold one property. You're only getting $350 a week rent. So technically, if your total is $550 in expenses, total expenses, not even including repairs, maintenance, gardening, whatever it is, right? $550 just to hold it, you only get $350 rent. Technically, you're at a loss, $200 per week, or roughly off the top of my head, that's probably about $10,400 per year negative NEG, just to hold that one property. Could be more, could be less. That basically is what negative gearing is. I know it's not probably structured the best way, but negative gearing is basically when all the expenses outweigh the rental income or income of the property, and that's what you're left with. So I don't recommend negative gearing. I've purchased some properties in my portfolio that are a little bit negative, but never that much. So thanks for watching, guys. If you have any questions, send them through and I'll catch you next video. Bye.